Right, we're here. We're at Fintech Connect. We're on our booth. Perhaps you could start off by introducing yourself for us.
Yes, Mark. Well, thanks very much for inviting me along. I'm Mike Carter from Innovate Finance. I'm a Senior Policy Advisor at Innovate Finance.
Fantastic. So obviously we've, over the recent sort of months or so, we've seen a lot of activity and the investment report, etc. out of Innovate Finance. Do you want to give us a bit of an idea from your perspective, what have been the sort of the key trends over the last sort of 12 months or so?
Well, from an investment perspective, Mark, when we published our report at the start of this year, obviously we were looking back at 2022, which had a declining trend in investment. And we had a panel of VCs talking about what were they expecting to see in 2023. And they all said the first half was going to be difficult, but that we hoped we'd start to see some green shoots in the second half of 2023 with regard to VC investment, not just in the UK, but globally. We haven't really seen that recovery start yet. Certainly there's a better mood. The VCs have certainly got the capital available, but we're still waiting to see for the full recovery. And I think that's, in a way, that's not a surprise because there's still quite an uncertain geopolitical environment out there, and investors tend to sit on their hands when there's uncertainty.
Yeah, and I think at the beginning of the year, if I heard the word keep our powder dry, for every pound I had that, I could start my own VC firm if I had heard that.
Yeah, no, very, very much. And the start of the year, the cost of living crisis was still biting. People didn't know how bad that was going to be. They didn't know what the impact of the Ukraine war was going to be on continued high energy prices. There were many reasons to be cautious. Energy prices have started to come down. The cost of living crisis has got better. Inflation has started to come down. So in that respect, things have got better, but we still haven't got a stable environment yet for investors to be ready to put money together in size.
And obviously from your sort of area from policy, sort of governmental side of things, is there things that the government can do or you think should be doing to sort of speed them green shoots coming out?
Well, I think the most significant event this year actually was the Mansion House Compact. And that was led by the Lord Mayor, Nicholas Lyons, and City of London, and we worked very closely with them. And they brought together the leading DC pension providers in the UK, and they signed a compact to agree to commit putting capital from DC pensions into growth companies, so into unlisted equities. There's been a big decline in investment by pension funds over the last 20 or 30 years. They used to fund a big chunk of equity, both listed and unlisted in the UK. That has changed dramatically. And this initiative is designed to reverse that trend and to get more capital flowing. Now that hasn't started to flow yet because there are still technical issues that need to be managed, but when it does happen, it'll start to bring a lot more capital into VC generally and Fintech specifically. And we're very excited about that because that will be a long-term structural change. And the government has been involved. They're being helpful in terms of changing laws where required, bringing legislation to help, but it's very much a collaborative push from industry and government.
Yeah, and I think that, as you said, that's quite an interesting and long term it'd be very attractive as well. There's always been this strange thing where UK pension funds have been investing outside of the UK, and sort of, I guess this is trying to reverse that and make it a bit more about investing in our own companies.
Yes, that's right, and I think partly it's an education thing. It's making pension funds aware of the opportunities in the UK, making them feel comfortable with the opportunities, and giving them the reasons to be investing and making UK VC investments available to their pension funds.
Yeah, and I guess one could think that the logical result on fintechs of VC money not being as available is a slowdown in innovation, a slowdown in expansion. Is that something that you as Innovate Finance have seen over 2023 as well, in a holding pattern when it comes to innovation?
Well, certainly we've seen obviously a lot less investment, and that has meant that companies have been more cautious. So companies, they look at their runway, how much cash have they got available, and they look at their new product launches, maybe new countries they're going to launch into, and they're going to be a lot more cautious because they know they can't just go out and raise money if they need to fund their next round of expansion. So certainly we've seen companies being more careful about their growth plans during 2023.
Absolutely. And obviously, I think there was a lot of funding for global expansion as well back at the sort of mid-2020, which potentially was good or bad for UK PLC?
I think it's net good. We want UK fintechs to be global in outlook, where they're building a business that can be scaled in the same way that we see some US fintechs are capable of operating globally, and that's important in order to drive innovation and in order to drive investment opportunities. Coming back again to the point about encouraging pension funds to invest in UK companies, the more the UK companies have got a exciting, fast-growing global business, I think the more interesting they'll be to investors.
Yeah, and I think obviously with regards to Innovate Finance, City of London Corporation, there seems to be quite a lot of collaboration going on with overseas institutions as well to try and help sort of facilitate that a little bit as well.
Yeah, so we and City of London, we both spend a lot of time talking to overseas institutions. We go abroad to meet them. We run events in other countries in order to help foster that investment back into the UK, as well as at the same time trying to encourage UK domestic investment. We need both, even though we want to encourage UK pension funds to invest more in growth capital in the UK. We still want to make sure that overseas investors want to come to the UK at the same time.
Fantastic. And obviously we're here at Fintech Connect. We're coming towards the end of day one. Other than your amazing session on stage, what have you heard that has been interesting?
Well, it's been a great event. There's a really good buzz here, and I think a lot of the sessions, the session I was in, a lot of the other sessions have been quite focused on data availability and big data, and I think that is becoming a bigger and bigger topic, partly because of the availability of data and that it's been collected and should be made use of, and partly because of the explosion in awareness and discussion around AI, because AI is going to be needed to analyse and make use of a lot of this data. The two go hand in hand, and that has changed a lot, I think, in the last 12 months.
Yeah, I can't have a single interview at this show today or tomorrow where the word AI is not going to be mentioned. What the thoughts for next year? Obviously, AI is going to be involved. Where do you think AI is as a from your perspective?
So there's great excitement in terms of firms wanting to use AI, but obviously there's still a big unknown around how it's going to be regulated and how it should be done on a safe basis. And I think everybody's looking for guidance in terms of how to use AI safely and responsibly, but they want that to come reasonably quickly because people want to get on with using it. So I think next year there's going to be a lot of discussion and debate about how to not necessarily regulate it, but in terms of how to have guidelines about how it should best be used.
Fantastic. Thank you so much for joining us here at Fintech Connect.
Mark, thank you very much.